Good Thursday morning, Market Chameleons. Everyone join us for the first time. Thanks for joining the Market Chameleon pre-market show with lots of technical errors today. I'm sorry for the late start. Dimitri Pargamanik will be joining us shortly. Please read the disclaimer. Let me get that up. Just make sure everyone sees it. You see the disclaimer, D?
No.
D?
Yeah, I don't see it.
All right. Let's see. Does everyone see it now? Do you see it now?
Yeah.
All right.
Good morning, everyone. I think that we may have launched it. You might have to send out a new link. Well, but good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon. We're not we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker dealer. That's what they're there for. And with that, I'm going to share my screen. You might have to let go, Will, here.
All right. There you go, D.
One second here. Yeah, let me share my screen. If you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer any questions you may have about the Market Chameleon tools, the data analytics. Yeah, sorry for the late start. I think we had some technical issues and had to restart
we had lots of technical issues. For some reason, my YouTube dropped, but everyone's back on. I see Jim, I see Rob. Thanks for joining, guys.
Yep. So, so we do these shows to try to help answer questions you may have. If you have a question, type it into the live chat on YouTube, and Will's watching it. He'll read them back to me. What we'll do really quickly is take a look at the pre-market report, just to give you guys a couple minutes to put in those questions, see if we could get some insights, and then we'll go to the questions. And the pre-market report, these are stocks trading in pre-market hours. We have this calendar view up top that does allow you to go back to a historical date if you want to check out what happened in the pre-market hours historically. Today, we're on January 18th, and so far, this is what we have from a high level. We have 589 stocks trading higher in the pre-market, 244 stocks trading lower. As far as volume, we have 232 million shares trading on up volume versus 74 on down volume. And if we convert that volume to dollar value, we have $4.9 billion worth of stock trading higher versus $885 million worth of stock trading lower. So from this perspective, looks like the trading in the pre-market hours has a bullish lean. Let's look at it from a couple more perspectives, then we'll move on to the questions. Down here, when we scroll down, we see we have a list of stock symbols trading in the pre-market hours. So we could see the price changes, volume, and we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. To make this list, we do set thresholds in there for price changes, liquidity, volume, because things in the pre-market do trade with less liquidity, sometimes low volumes. But if we look at the list, you'll see that we do have small cap stocks in there, ETFs, leverage products, could be a closed-end fund, preferred, any security listed on a major U.S. exchange. If it's trading in pre-market hours and meets our thresholds, it can make this list. And to narrow down to a smaller group, we could use the filters above. And before I do that, just really quickly, we do see there are 140 stocks that made our biggest percentage gainers list versus 44 decliners. And that also indicates that the sentiment in a pre-market hours is leaning towards the bullish side. But let's narrow this group of stocks down a little bit. And if you do have a watch list, you could filter by your watch list. I'm going to use this filter in ETF. And when I click on it, you get a drop-down menu to select from different ETFs. We're going to choose SPY, which is the S&P 500 ETF. And when we do that, the list below will get filtered by stocks that are holdings in the SPY ETF. So now we see that 25 stocks made our percentage gainers list, biggest percentage gainers, 9 on our biggest percentage decliners. So these are stocks that didn't meet all our thresholds. And again, this also points to a more positive sentiment in the pre-market trading. So let's take some questions now. Well, if you have them, we gave it a couple minutes.
Nothing's popped up as of yet, D.
Okay. So what we'll do is come back to SPY. It's an example we started out yesterday. I'm going to go to the options chain over here. And what we did was we discussed, let me just pick up in the options chain. I'm going to select a expiration that, expires a little bit further out, not today. And I'm looking at this January 26th expiration, 7 trading days to go, 9 calendar days. So when we look at the options, we got calls and puts, and we have prices. And as investors, as traders, as risk takers, one of the main questions is, what do we think this particular option or strategy that we are focusing on, what do we think it's worth? What is, based on some valuation method, right? So we could have different valuation methods, but based on some valuation method, what do we think it's worth? Because, there are two things going on here. One is we could put on a particular strategy or buy or sell a particular option because we have an outlook, right? We have a certain outlook that we on the future. So we could feel strongly, I'm bullish or I'm bearish, or I think volatility is too high, too low. So we have a certain outlook. But part of our assessment is, well, what do we think this particular security or strategy is worth? And if I create a benchmark, I could see how much it's deviated away from it. Am I paying over? Am I paying under? If I'm paying over, how much? If I'm getting under, how much? And you could do that for 2 reasons. One is you want to, you're concerned if you're, overpaying for something, and if you are, by how much? Or if you're getting a discount, that could be extra edge. And also, what is the market signaling? Because if the market itself is lined up where it's overpaying, where it's much higher than normal or much lower than normal, well, the market prices could also be signaling that maybe something, you're not considering, or something else to look at. And that's also important. So when we come to the valuation, and I'll just take, let's just take a 476 call. It's $2.10. And to make it simple, I just clicked on the offer. So you can see here that this would be buying January 26, 476 call for 210. And then just hit calculate. And when we do that, this is kind of an example of what we did yesterday. We get this payout diagram. So the payout diagram, what does it do? It helps us visualize what this option would be worth at expiration versus what we paid. So this is where we would profit and lose. And that also helps you visually see if this aligns with your outlook. Because if your outlook is very bearish, then this would not work, right? Well, this, at least, I'm not saying this is not this would not line up with your outlook, right? So because this particular strategy has a bullish lean. So once we see that, let's say we agree with this is good with my outlook, is this $2.10 that we're paying for this option, how does that compare to historical benchmarks? What is usually an option with similar conditions and characteristics? Where does it usually trade around? So that's the next question, and we discussed it yesterday. No matter if you're whatever you're participating in, whatever you're trading in, if you're even bankers or finance, it's always appraise what you're about to invest in. And that's kind of what we're trying to do here. And the method we used yesterday was this distribution theo, where over here, what we did was come up with an average value based on how the stock performed in the past. So it said, forget about what this option, the markets are. If I had to create an average value, what would that average value be based on how the stock moved, right? So based on the stock moving up and down over the long term, because we know, how many days, we know the time frame that it's left between now and expiration. We know how much the stock has to increase by to cover the cost of this option. And then we could see how often that happened in history. And so we did that yesterday.
Hey, D?
Yeah.
We had a quick question about IV pop up from Rick. He asked, does the daily implied move calculate before the open or previous close at the money straddle?
Wait, read that again.
Does the daily implied move calculate before the open or previous close at the money straddle?
I'd have to see where he's looking at. I'm not sure what it's referencing.
Hey, Rick, just let us know where you're looking.
So, yeah.
Actually, because it was such a strange opening today, trying to get the show up. I forgot to put the link to the morning show in. If you want to come in live and walk us through, you could do that too. Just let me know. So I put the link to the Zoom if you want to come on the Zoom and ask it live. But where are you actually looking at the daily move?
Yeah, just so I know I'm answering the right question. We have a lot of tools on Market Chameleon. We have hundreds of thousands of different pages.
It says gap up on the open would put SPY at the top of the implied move this morning. I don't know where. Again, where are you looking?
Yeah. Without
volatility, he's looking in the volatility section, then implied moves.
In the volatility section here.
And then implied moves.
Okay. All right. So, yep. So when we're looking at this particular chart over here, what this is doing is you see the bars here. You see the bars up and down. And then you see a red or green bar. So the bar up, this is the market implied price move, right? Where's that coming from? Well, it takes the option that is closest to expiration. So the SPY might be the yesterday's straddle, or yesterday's at the monies. It calculates that at the money IV based on a weighted average of the options surrounding that the money, because you're obviously not going to get a strike that's exactly to the penny where the stock is. So you have strikes around where the stock is, but you don't have an exact $472.29 strike. So we have to come up with a synthetic straddle of what we think 470, if there was a straddle, where would it be approximately. So what we do is we take the at the money option, implied volatilities, create a weighted average to come up with that index. And then basically we'll say, okay, based on that implied volatility, what is the daily move implied from that implied volatility? Okay, so keep in mind, what is the Black-Scholes? The Black-Scholes implied volatility is saying that, it's looking at average daily moves, right, from now to expiration. This is looking at the option years. And when we look at the bar here, all right, this bar, that was based on the closing values. All right, so it says, where did we close yesterday? And the close from yesterday is the last or most current market prediction for the next going forward, right? Next day after, and whatever. So we look at the closing, options such as over here, because those are the most current, right? Like if January 8th, these are the most current market predictors, right? Because what are these prices? These prices over here are based on people's outlook, right, of the future. And working from this, right, the most current ones, we say, okay, the market's closed. What is the implied daily move? And then we save that for the next day, right? So that would be the last observation that we saved for the next day, and then we compare it to the next day's move. All right, so closing values, I think that's what the question is. It's the closing values, and this would be the nearest expiration, right? That will cover one day's move. And then we compare it to the next day. So yesterday's, just approximately, let's take a look at it. I'm looking at the activity. So yesterday's straddle, right? The synthetic was indicating that the markets were pricing in a 0.5% move. And if we if we converted it to a dollar move, right, if we took that percentage and looked at where the stock price closed, right, that would translate to $2.37. All right, so far, yeah, we're up $1.88. So that's basically what it's doing, because this only has one day. If we looked at 2 or 3 days, we'd have to convert it to a daily move, but this is pretty much already the daily move. And what do we mean by, like, okay, the market prediction? Well, the straddle itself, right? The straddle itself is where the buyers and sellers exactly break even, right? So if you bought a straddle for 237 and you sold and somebody sold a straddle 237, well, that's the meetings of the mind. So that's exactly where they would break even. So this is where the market is pricing, daily move. And that's kind of what you're seeing in so this would, right? So that would be the ending value from yesterday. And then we would capture that, store it, and then we would monitor the move today. So far it's moved 0.4%, right? But it could still move more than that all the way up to the end of the day. Okay, so we're just watching this move to the end of the day. Does that help answer that?
Yeah, that was super helpful. There was a big thank you for that, D.
Yep. Okay. So I think we started late, and I don't know if I'm going to get a chance then to go over what I wanted to do today with the valuation model. So what we'll do is just continue on that tomorrow, unless we have questions. But we'll tomorrow, if we don't have questions, what I'll do is come over here, and we'll bring up an option, and then we'll talk about running different models, okay, to see where the different models would put a value on that option. And then we could compare it to the market value to get a sense of, where the market is today versus a theoretical value.
Excellent. Great job, D. Thanks for putting this
All right.
together with technical difficulties.
Yep.
Everyone who joined us, thanks for hanging in there and working with us. Great job, my friend.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day, and hope